Hey everyone, welcome back to Corporate Decoder, the place where we try to make sense of all the corporate jargon that makes your head spin, and we will do just that today with CPS Corporate Standard Holdings Incorporated's rather lengthy third quarter report for 2025. What is hiding in the numbers this time around? Alright folks, buckle up because we are jumping into Corporate Standard Holdings Incorporated's latest report. This is their quarterly update, a 10Q filing, and it covers the period ending on the 30th of September 2025. Now, we love diving into the nitty-gritty of these financial statements to see what is really going on behind the often polished press releases. First up, let's peek at the income statement for the 3 months ending the 30th of September 2025. We see sales at $695.5 million. That is a small increase from $685.4 million in the same period of 2024. Over the 9 months, sales were about flat at $2.068 billion compared to $2.070 billion. Now that sounds pretty stable, but if we look closer, the cost of products sold, which is basically the cost to make their stuff, has gone down a bit too, from $609 million to $608.4 million for the quarter, and a more significant drop from $1.849 billion to $1.811 billion for the 9 months. This is interesting because it is making their gross profit, the money left after making the product, look much better. For the quarter, gross profit jumped from $76.3 million to $87.1 million, and for the 9 months, it soared from $220.9 million to $257.4 million. That is a big jump, almost a 17% increase year over year for the 9 months. It seems like they've gotten a lot leaner in their production, which is good for the bottom line. However, when you look at the very bottom line, the net loss attributable to Cooper Standard Holdings Incorporated, it is still a loss. For the quarter, it was a loss of $7.6 million, which is actually better than the $11.1 million loss in the same period last year. For the 9 months, the loss narrowed from a huge $119 million to a still substantial $7.5 million loss. So, while their production costs are down, and that is boosting gross profit, they are still in the red overall. Now let's look at their balance sheet, which is like a snapshot of what they own and what they owe. As of the 30th of September 2025, their total assets were $1.86 billion, up from $1.73 billion at the end of 2024. Their cash and cash equivalents were $147.6 million, down from $170 million at the end of last year. Their accounts receivable, the money customers owe them, went up quite a bit from $310.7 million to $382.3 million. Inventories also increased significantly from $142.4 million to $197.7 million. That could mean they are building up stock, perhaps anticipating more sales or facing slower customer payments. On the liability side, total liabilities were $1.97 billion, up from $1.86 billion. Their long-term debt remains high at over $1 billion. And then there is equity, which for shareholders is essentially what is left if you sold everything and paid off all debts. For Corporate Standard Holdings Incorporated, their total equity is negative, a deficit of $110 million. This is an improvement though from a negative $133.4 million at the end of 2024. This tells us that as it stands, the company owes more than it owns through its assets. This is not ideal, but for a company with a lot of debt, it is not entirely uncommon, especially if they have a plan to turn things around. Looking at the cash flow statement for the 9 months, they generated $8.2 million in cash from operating activities. That is up from just $1.6 million in the same period last year. This is a positive sign, showing their core business is starting to generate more cash. However, investing activities used up $33.9 million for things like buying equipment, and financing activities used $3.8 million for debt payments and the like. Let's now zoom into the results of operations section. It is broken down by segment. For the 3 months ending the 30th of September 2025, sales in Sealing Systems went down slightly by about $4.6 million compared to last year, to $348.8 million. Fluid Handling Systems, however, saw a nice increase of about $14.8 million, reaching $328.6 million. This indicates a bit of a mixed bag within their product lines. When we look at segment adjusted EBITDA, which is a measure of profitability that excludes certain items, Sealing Systems pulled in $30.9 million, a slight increase from $29.9 million last year. Fluid Handling Systems saw a much bigger jump from $23.1 million to $29 million. So Fluid Handling is really showing some strength here. For the 9 months, Sealing Systems adjusted EBITDA increased significantly from $86.3 million to over $103.5 million. That is a solid gain. Fluid Handling Systems also grew from $50.4 million to $77 million. So both segments are showing improved profitability before those special items, which is encouraging. The company has been active with restructuring for the 3 months ended the 30th of September 2025. Restructuring charges were $3.5 million, up from $1.5 million last year, mainly in their Sealing Systems segment. For the 9 months, these charges dropped from $20.4 million in 2024 to $8.5 million in 2025. This suggests they are past the biggest restructuring phases, which is good for future predictability. Under other income net for the 9 months, they had an increase of $17 million compared to last year, largely due to $10.3 million from royalty settlements and lower foreign currency losses. This is like a nice little bonus that helped improve their overall results for the period. Interestingly, for the 9 months ended the 30th of September 2025, they were actually profitable before income taxes, showing $7.2 million earnings, a huge swing from a loss of over $103 million in the same period of 2024. This is a critical shift indicating a potential turn around. Now, even with that pre-tax income, the income tax expense for the 9 months was $14.6 million. This difference between pre-tax earnings and tax expense is a bit unusual and is explained by the geographic mix of income and losses, and the fact that they cannot record a tax benefit for some losses due to what are called valuation allowances. This is a common complexity when companies operate internationally. And back to the bottom line for shareholders, the net loss per S-share. For the quarter, it was a loss of $0.43 per S-share, an improvement from a $0.63 loss per S-share last year. For the 9 months, the loss per S-share narrowed significantly from $6.78 to just $0.42. Share figure is directly tied to the net income or loss, so the improvement here mirrors the company's improved profitability. Now, let's quickly touch on share repurchases. The company has an authorization to buy back up to $150 million of its stock. As of the 30th of September 2025, they still had about $98.7 million left on that program. Interestingly, they didn't repurchase any stock in the 9 months of 2025 or 2024. Except for a small number of shares purchased to cover employee tax withholding obligations. This suggests they are prioritizing other uses for their cash or not seeing a compelling reason to buy back shares right now. So what is my take on all this? Cooper Standard Holdings Incorporated is showing some real signs of improvement. Their lean initiatives are clearly working, boosting gross profits and improving segment adjusted EBITDA. The move from a massive loss to a pre-tax profit for the 9 months is a big deal. However, they are still operating at a net loss, and their balance sheet still shows a significant deficit in equity. Their debt load remains high, which is always a point of concern. The strength in their Fluid Handling Systems segment is a positive, but the slight dip in Sealing Systems needs monitoring. The large increase in accounts receivable and inventories could mean they are building up product or facing slower payments, which is something to watch. Overall, the company seems to be navigating a tough industry with some success. But the path to consistent profitability and a strong balance sheet is still ongoing. They are clearly working towards it, but it is not a done deal yet. Alright, that is our breakdown of Cooper Standard Holdings Incorporated's latest filing. What is your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps. And subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.